So for the next 10-15 minutes, I would like to share with you market outlook and also give you an update on our investment theme for this year. China has been doing very well last year. First in, first out of the pandemic. It's also one of the only major economy to be able to show growth last year. We think the V-shaped recovery is more of a supply story than a recovery driven by government-led stimulus in many other developed countries. China factories mostly resumed to normal and therefore taking market share away from the other countries, which are still in lockdown. So we can see from this chart that China export growth hiked to a historical 21% growth in November last year, which is the highest in the past 5 years. Fixed asset investment only grew by 3%, so there's no sign of major stimulus by the government. So overall, we think that China is in a much stronger foundation than most other countries. The globalization is also another issue that China is facing, but China is adjusting to the reality very quickly. By emphasizing its domestic market, China has created what we call a demand chain, where domestic market provide them the engine for growth, production, innovation, R&D, brand development, all can happen within China without depending on globalization and trade. I would say China is doing a good job transforming its economy. Our bullish view on China for the long run remain unchanged. Firstly, foreign investors are only beginning to invest into the domestic Chinese stocks. Shanghai and Shenzhen combined are the world's second largest in terms of market cap, but the most active in terms of trading volume. At the same time, foreign ownership accounts for less than 5% in this market, which also means that immense growth potential in the future. Greater allocation to China equity also happened domestically. Chinese households represent one of, if not the largest saving pool globally, but to manage their wealth, they look specifically for properties, money market funds, and as simple as bank deposit. Things could change gradually as it appears that they start to also allocate to the domestic stock market. We're also bullish on the renminbi. China 10-year treasury yield is now 3% versus 1.1% from that of US. So in other words, simply putting your money into renminbi bank deposit, you can earn an extra 200 bips of spread. Valuation of the China-Asia market is not excessive, with PE trading at roughly 16 to 17 times, which is slightly above the historical average. We remain positive in the short term, but actually quite concerned about the medium-term outlook of the global markets. Overly stimulative policy will have created fears about inflation. At the same time, most other countries are in huge debt level. So at some point of time, there will be a reversal of the QE, and when investors see the first sign of this reversal, they will take the money off the table. And because of this money printing exercise is happening all over the world, those with assets will actually benefit. So the rich-poor gap will further widen. This will lead to a populist politician will ultimately taxing the rich and give it to the poor by implementing wealth redistribution policy. This policy may have negative impact to the stock market. So to conclude, we are cautiously optimistic in the short term due to the investment environment, which is a recovery of global economy, low interest rate, government stimulus, and the vaccination progress. Longer term, we have doubts about the sustainability of the situation. So next, I will give you a recap of our strategy last year. The chart shows you that how they perform. The theme that we liked last year were consumption upgrade, online service platform, technology, and healthcare. So I have listed out some of the top contributors to our flagship fund. The return last year were in a stunning range of 60% to more than 300%. These top contributors are mostly from internet, technology, and healthcare sectors. And I think it may be unknown to most of you, we actually spend a lot of time and resources in researching these innovation sectors. Last year, the lockdown did not stop us from doing our job properly. We do company visit, channel checks through Zoom meetings and conference call. And it turned out that it's actually more efficient for us because less time spent on traveling. The number of DD meetings or calls actually broke historical record last year. We have done more than 8,000 DD meetings, and of which more than 4,000 were about these three innovation sectors. Our investment team in this area have an average of 10 years of experience, and the dedicated team also include our onshore analysts in Shenzhen and Shanghai, who are able to carry out on-the-ground research even when the cross-border traveling was not allowed. Our investment theme this year stayed precisely the same as last year, as they represent the unstoppable trend in China. The first theme is internet sector. So one frequently asked question from investors nowadays is that whether you should hold on to them after this big rally. And this is how we see these companies. You can imagine that this internet giant, they operate like a huge shopping malls. So every day, hundreds of millions of people spend 30 to 90 minutes socializing, entertaining, and purchasing goods and services there. But these mega malls usually target one or two of these business lines, as you can see from the size, such as online games, e-commerce, food delivery services, etc. So somehow they are finding ways to cross-sell into other business lines. And then let me give you an example how they do cross-selling. A few months ago, a platform which has 300 million daily active users came up with this idea to sell fresh vegetable, fish, meats through their apps. So what you need to do is that you place your order before 11 p.m. and then you can collect them the next day before 5. They source directly from the farms, and the farms send the fresh foods to the logistics center for packaging overnight. So loads of trucks deliver to the pack to the collection point within 300 meters of your premises, as you can see from the picture. People are lining up in front of the mom and pop shops to collect their grocery, which are usually just 3 minutes away from the home. I think we are one of the pioneers in researching this business model. We send our analysts to do channel check. We talk to the logistics center manager, mom and pop owners, farm operator, etc. And our finding is that this business model really works. Lots of cost saving by cutting the middleman, and also the operating cost of running a physical supermarket. They save 30% of revenue in labor, 5% in rental, 4% in wastage. So if you look at the chart, you can see that in total, there's roughly 16% saving compared with a traditional supermarket model. So previously, investors did not take into account the valuation of this new business. Now some of the sell-side analysts actually give $100 billion valuation to the key player in this market. And this is a big market with 10 trillion RMB in annual sales. So overnight, this company worth 30 to 50% more than their previous estimation. Another example is about a video sharing and a social media platform. The market leader now is Douyin, which is also called TikTok in US. Can you imagine that in China right now, 600 million active users of Douyin spend an average 2 hours every day watching these short video clips? A few months ago, another major social media platform with 1.2 billion active users add a function on the app which allow the existing user to post these video clips, which is similar to Douyin. So as of today, there are 300 million daily active users after only a few months of operation. So some sell-side analysts recently give them a valuation of an extra $300 billion because of that. So these are great companies, and I think we are only halfway through the process of cost selling. And it is a long way to go. And they may also come up with new business model which does not even exist right now. Our approach is that we are long-term investor for these great companies, and we can tolerate short-term price fluctuation. However, we will trim the stock if it appreciates to a point where its return is only moderately attractive. And we will buy them back when the share price returns to a more attractive level. We will also consider selling the stock if we find something in our investment thesis was incorrect. So another sector we like is healthcare. China used to take advantage of its low labor costs by producing low to mid-end products. So 5 years ago, it was actually beyond imagination that China would become an innovation drug exporter one day. And as you can see from the Reuters article last year, Belgium and also Innovent, the two leading biotech companies in China, won billion-dollar deals to out-license their drug to the global top 10 pharma. So even the media was surprised that global pharma now looking for solution in filling up holes of their cancer portfolio from Chinese biotech companies. So take Innovent as an example. In addition to the $200 million upfront payment, Eli Lilly will also pay a royalty fee of up to $800 million to Innovent. So this is an evidence showing that China is beginning to transform itself from a low-cost producer to a technology-driven growth model because of its rich talent pool. And you can see from this table, our channel track shows that China has an advantage of providing low-cost R&D technician. And the total R&D cost of developing an innovation drug in China is only 1/10 of the global pharma. So in the past, China domestic market contribute 100% to this leading biotech company's profit. But in the long run, we think that overseas market will become the largest revenue source for some of this company, as they receive royalty fee by licensing out the drug to global pharma. Another thing we like is a consumption upgrade. So there are three main groups of people contributing to this story. They are the middle class, millennials, and also rural populations. China is having an additional 11 million middle class every year, and they are mostly young people with an age of 18 to 35. They contribute about 2/3 of the consumption growth in China. And a survey was done recently showing that this age group of people prefer domestic brand, and actually far more than the older generation. We find that the China young people and the older generation show different spending pattern. Young people in China are more inclined to buy local brands, partly because they grew up in a period where China has become increasingly powerful. And also they are educated in a way to appreciate their cultural heritage. They are also more confident about China values, and they see this brand, local brands, as a representation of their identity. So for example, their favorite brands in China include Li Ling, Xiaomi, Molitor, and also DJI drone. The other major contributor is rural area population. The wage growth is actually much faster than the urban area. Today, there's still more than half of the population live in rural area, and I think we should never underestimate the depth and breadth of this growth potential. So we believe this environment can incubate major domestic brands, and as China will become the largest consumer market globally, there's a high chance this brand could turn into the largest global consumption companies in the future. So let me move on to talk about higher education sectors. Our investment thesis is exactly the same as last year. Huge room to grow enrollment rate and also tuition fee in China. More than half of the people with the age of 18 still do not have a chance to enroll in colleges. And the average tuition fee in China is roughly $2,500, which is only 1/10 of the US market. So I think there's a long way to grow. Our recent channel check suggests that the enrollment remained very strong this year, even under the pandemic. And most of the privately owned universities have increased their tuition fee by roughly 10 to 15% this year. So with strong domestic demand and supporting policy, the future of China higher education operator actually we believe look quite promising. The final theme we like is tech leader. My colleague Chen Jun will discuss this topic in further details on the next session. So these are the 5 unstoppable secular trends in China, and we have invested heavily for most of our fund, and it is based on our bottom-up long-term investment approach. So lastly, may I take this opportunity to wish everyone a safe and healthy year ahead. Thank you very much.